And it's time for Commvault, cvlt, Nasdaq, 10 years, multi-candles, and this one has a pattern that's a little different than what we've been seeing for the past 2 years there on the Nasdaq and New York Stock Exchange. When you look at the Apples of this world and Facebook, I think they're all been pretty much trending. I think higher than that. So I guess you could kind of consider this one a underperformer compared to those. Maybe someday I'd overlay one of the other members of its sector and see how it behaves. But anyways, I don't really look at that. I think I used to back in the days do drill down the market, then buy sectors, and then from the sectors I'd look at the stocks that were doing better. But I just when I was on my mindset of simplifying my trading framework, that just went out the window. And every time I want to decide, do I need to look at this or not, I just came back chart. There's one chart, and if it's ready to break out, it's ready to break out. If it's even if it's the last one, it's grouped to that's breaking out, that's what it is for it. And the ones that are, and if it's time for a breakdown, it's time for a breakdown, no matter what sector it is. That's the way I see it, and it keeps my trading framework a lot simpler. I don't have to look at sectors or do stuff like that. I think maybe it happens naturally just by looking at charts, and then I start seeing which ones are breaking out, and my brain still knows, like let's say Apple and Samsung, they're in the same field, in the same sector, but then I see Apple's breaking out, and then I see a pattern starting to draw out on the Samsung. And then I say, okay, it's following Apple, it's going to break out soon, and then you see all that. And sometimes you have mixed messages, which I'm starting to see now. Some stocks are still like driving higher, and some they're just having difficulty doing new highs. So I don't know what that means. I try not to think about that. Correlations. I used to do correlation trading, and look, correlations change, so I don't trade correlations. If they're there, whatever, that means if there's two charts that are correlated 100%, then that just means I have two charts I could trade. I don't say to myself, oh, the Swiss franc is going up, then the gold has to go up. Like, correlations could exist for 100 years, and from the next day they could disappear. So that's out of my control. The only thing I have in my control is the chart, which I should start doing some lines, and that's it. My risk and money management protocol. All the rest is noise. All right, so here we have the closest pattern. I'm gonna. So now this is nice. Commvault has been after hitting a bottom here. It broke out of that bottom formation, which lasted about a year, or how many candles? 1, 2, 3, 4, 5, 6, 7, 8 months breakout. I know hindsight's 2020, so the best way, like I always say, is what I should be doing actually is hiding, going back in time, and see, like that. And then say, okay, here's my resistance, here's my pattern. I would have put my alerts, and then the next month, close above, measured move, target this one, see what happens. Target reach, there you go. 1, 2, 3 months later. See, your sell stop would have been here, you would have been safe. Your entry here, and your target reach right there in this big candle. And then you would have been out. You would have waited for another pattern to morph, to appear. And it's this one here. Right there. All right, so now that's where we are today. We're closer to the breakdown level. Let me just... So these are my possible targets. Either bearish downwards move. I'm trying not to use bear and bull anymore. There's too much emotional connotation attached to it. So to have a good emotional IQ and be as much as a robot as I can, I try to avoid those words. And here's the bullish target if ever price action goes back all the way here. All right, so target 75, the upwards target 75. The breakout line seems to be around 62. And here the breakdown line is 48. And the target is 35. So right now I would go into my considerations for establishing targets. And this target's nice, okay, but might hit some congestion here. This previous resistance turn support, which I call a wall. So the price action could actually get faded around here, about 2/3 of the way. So you have a couple of choices. Either you say, I'm going to play the classical chart pattern with its implied measure move the way it's supposed to be. Or you could cheat, reduce the target, and increase your probabilities of reaching that target. But you're going to lower your risk to reward ratio. And with this strong a base or this strong consolidation here for the breakout, I'd probably be tempted to have this closer target and wait for another bigger signal. If ever the price does reach that, well, then after that, I would probably draw that out, and then I'd probably have another bigger move that I could eventually play. Something like that. So there's no rush. That's when the emotional IQ gets in, the greed. Don't get greedy on your targets. Oh, wow, I have a 6-to-1 ratio, risk to reward. It's going to go for the 3-to-1 ratio or the smaller ratios, reach that target, and move on. I always try not to increase my probabilities of reaching my targets more than always relying on the implied measure move from a classical chart pattern. That's where a big point where I modified my strategy. I wasn't always reaching my targets. I had maybe 40-50% success rate, and I wasn't drawing my support lines. You see, at the close or at the open of the candles, I was including the wicks, and sometimes I was making a mix of both. And recently I've been tuning it down to always using the bodies to establish my breakout lines, my pattern perimeters. And I've discovered that they really have, or observed that they really have a utility, the wicks. It's noise, and the truest support or the strongest support is at lines drawn excluding the wicks. All right, so Commvault, that's where we are. It looks pretty nice though. I've put in my alerts. Yeah, I always check out both scenarios. You have to, and then you see which one is more plausible or which one is more, which is more probable of completing in the time frame we're at. And if it doesn't, then because since we're closer to this side, that's why I'm saying this one has more probabilities of completing the pattern by breaking out through that line and giving me my implied target. But who knows? Maybe the price is going to go bounce off that line, go up here, and then chart's just going to be different, and we'll look at that. Anything can happen. Commvault. What else could I say about Commvault? Is there divergence? No, these are pretty much my targets. I have done a previous analysis of Commvault back in the days. Let me see if I could get to it. Here we are back at my badcharts.com. There's some down. You could always go on that site. And what's fun about these monthly candle analysis is that they last a long time. They last at least 1 month until the breakout candle is done. And but sometimes I do the chart and there's no breakout, and just like 5-6 candles that of more of consolidation within that same pattern. And that's like 5-6 months. So you could easily go in Badcharts and look at a analysis I did 3, 4, 5, 6 months ago, and they'd have to slightly refresh them and consider those new candles that appeared on the chart, but they're almost as good as you would have done them just more recently. And March 4, 2015, this approaching 3 years, I've done this report, and I had a breakout. I had a breakdown with a target of a monthly candle close below 43 mark gives an implied measure move target of 30. And this is how I drew my lines back then, which seems okay. It's funny, right? Because like this is a previous me. It's an old me. It's me, but since we have experiences and our point of view change, and sometimes it's just funny looking at our past work, how we've evolved and added our experiences to how we view things. So this is when March 2015, and then I had that close under 43, this pattern, and then the target of 30. So let's see what happened. Let me get back to my chart. There you go. Okay, here we are. Commvault. March 2015. Is it this one? February. That's 2014. All right. Okay, I think it's here. Well, I can't remember exactly where I put my lines. Is it here? Here. So essentially the breakdown is this candle right here. And do I still have the same measured move? Copy, create parallel line, target of 30, yeah, about. And see what happens. And yeah, target, bam. Breakdown candle. That's a nice, that would have been nice risk to reward. You have a tail here, your buy stop here, your entry right here at the close of that candle, and the next month you would have reached your target. One shot. Here the low is 31.89, and the next month. Okay, so depending how strict I was with my lines that I did back in those days, both of these targets would have been reached. And that's one of the lessons I've learned. Always go for the closest target. And you see here, you have some resistance, and the price action faded, had closed back above it, and it took another month. There's some price action that happened here. It's all good, but price action closed above that support line. And what happened after that? See, well, okay, bounce, bam, right, straight on it. So you got to see that these support and resistance line, like one of my viewers told me, sees them as not a wall, but the price action sinks through the resistance, the support, and bounces back out. And this is represented by the wick. and the close or the open of the candle is the actual, if you want to get as close as you can to an actual resistance, since it's that number right there. That's the closest the chart is going to give you that information. And that's that. Then we are today, about 3 years later. Price action rolls along, and this is my setup, and this is my alerts at these key levels I identified. Cool. All right, Commvault, cvlt. See you when those alerts are triggered. Ciao.